Hello everyone, I'm Brett Stewart with Global Agritrends. The webinar will begin here immediately. Let me have anyone listening, if you would click your raise hand button if you can hear me. This is a one-way audio. I just want to make sure that I'm not speaking into space. Okay, we've got some raise hand buttons, good. So it looks like we're logged in, ready to go. Again, I'm Brett Stewart of Global Agritrends. This is a joint webinar that we've put together with Global Agritrends and Cattle Facts. I also have Richard Fritz of Global Agritrends on the line here and Kevin Good with Cattle Facts. This will be a one-way audio webinar. That means you're all muted. You'll be muted throughout the webinar. If you have questions, you can ask those questions by typing into the question box. At the end of the webinar, we'll go through the questions on that question box. Now, I know we have a few members of the media on this call, and we welcome you to the call. We would ask that you consider this live presentation off the record for reprinting or publishing. However, if you would like to use any quotes or content of the webinar, please call or email both Kevin Good or myself, Brett Stewart, and we'd be happy to help you with content or quotes or data or information. So, as I said, this is a joint webinar. What we're going to talk about today, we're going to have Cattle Facts go through their view of the U.S. cattle and beef markets. They're going to give an outlook. Kevin will talk about the U.S. supply-demand situation and give their expectations for the remainder of the year and what to expect into 2018. So as Kevin finishes, then he will turn it over to me and I will be talking about the China beef deal, and we'll talk about Chinese beef demand, we'll talk about the deal, and we'll talk about eligible supplies. So with that, I will turn it over to Mr. Kevin Good from Cattle Facts.
Thank you, Brett, and thank you for inviting us to be part of the webinar this morning. Again, Kevin Good with Cattle Facts. If you are not a member of Cattle Facts, you can see our website here, cattlefacts.com, or call in 800-825-7525 for more information as far as getting plugged into our organization. Brett would go ahead and change the slide, and basically is what we're thinking as we start out this presentation. We're going to give you a 50,000-foot view of where we think cattle supplies, beef numbers are today, along with other protein supplies, where they are going forward, some of the challenges we face, and then finish up with the price outlook as we finish and turn it back to Brett. From a big picture standpoint, generally speaking, the U.S. is in very good shape from a moisture standpoint. The Corn Belt in particular looks like we're lined up to have another very adequate corn crop. The areas of concern that we've picked up here over the last 30 days in particular would be up in the Dakotas and Montana. You can see some of the red developing there. It looks like that's a spot that we're going to have to keep our eyes on, as well as the southern plains, primarily in Texas. Both of those areas are starting to dry out a little bit. So as we go forward, those are big cow producing states. We'll have to watch that as we go forward. But generally speaking, moving to the next slide, you can see that we feel very comfortable that from an input cost standpoint, as we think about cattle production, pork and poultry production, input costs, looking at corn as a proxy, we are fairly optimistic that we'll continue to have a big crop going forward through the remainder of 17, which will give us the opportunities as we move on into 18 to continue to see all three proteins at a profitable level. So you can also see that we've got the range around the average very tight this year compared to where it's been historically over the last decade. That's one thing that we've seen in the grain markets in here is with a more known supply, big stocks to use ratio carryover. At the same time, very adequate crops over the last couple of years. The markets in the grains in particular become a little more predictable and the range has gotten tighter. So as we move to the next illustration, we can see that with the combination of profitability, where the cattle market has been the last couple of years, with the prospects from a weather standpoint of a big corn crop this year, input costs staying relatively manageable from a historical perspective. Exception would be the Dakotas, where we've got some concern. You can see that we're on pace to grow the beef cow herd by an additional 800,000 head this year. going into 19 as we think about the next 12 to 18 months. A lot of water can go under the bridge by then, but right now we're profitable, got good moisture. We would expect that we'll continue to expand the cow herd. The next illustration tells us what that means when we get to fed cattle slaughter. And you can see from a historical perspective the big drop we had from 2000 at 30 million head to 2015, 23 million head. So there's no wonder that we drove a lot of packing capacity out of our industry over that time frame. Well, as we've turned the corner with a bigger harvest level last year of 1.5 million, you can see we're on pace to have a 1.1 million head increase. And those supplies look like they're going to be pretty large all the way through the end of the year. Thinking about the placement pattern of the last 3 months, March, April, and May combined, placements were 625,000 head above a year ago for the same time frame. So we've got plenty of cattle scheduled out into the fall. Just from a cycle standpoint, with bigger calf crops, we'll have bigger supplies as we move on through 2018. Now on the bright side, looking at the next illustration, you can see that we've been able to take some of that product off the domestic market. The balance of trade has improved, and you look at the text box there, in 2016, the combination of increasing exports, diminishing imports was about 640 million pounds. Well, you divide that by the 1.5 million pound production increase last year, and that means that 43% of last year's production increase was taken off the domestic market. The same trend is taking place this year. Increasing exports, diminishing imports. The balance of trade will improve by 420 million pounds, which means about 55% of this year's increase will be taken off the domestic market. So as we think about it, it's extremely important that exports continue to grow as we go forward. So the bottom line with the next illustration, this is what we drive price off in our models, is per capita supplies. First we'll look at beef, and in a few minutes look at pork and poultry rolled together. So for this year, the combination of basically better exports, limited imports, carcass weights declining, growing population domestically, has our per capita supply only up a half a pound this year, and that's one of the driving factors that's allowed the markets to have a better average year to date than was forecast as we started the first of the year. Next illustration, let's roll in pork and poultry. For a bigger picture, you can see our forecast for increases all the way across the 3 proteins. Frankly, these forecasts would be smaller than we would have had on Jan 1. At that point, we thought we'd have a 3 billion pound increase across the board. One thing that's happened, you've got beef carcass weights down, we think, 14 pounds for the year. Pork weights look like they'll be down for the 3rd year in a row, which has not happened historically. Very rarely would they be down for 1 year, year over year. And this could be the first year in history, basically, that bird weights will decline year over year. So weights have really helped keep that production increase in check. Nonetheless, as we look at the next illustration, we can see that we will have a challenge as we move into the second half of the year. Again, from a global picture, we've got to recognize we are the biggest pork, or biggest beef and poultry producer on the planet, 3rd largest pork producer on the planet. As we think about it, the seasonality of supplies, rolling all 3 proteins together, is going to represent a challenge as we go out into the 4th quarter in particular. Remember where we've put the lows in the cattle market the last 2 years. They've tended to be later in the year, haven't they, compared to the long-term seasonal. That's lined up with some of these big increases we've seen as we think about total protein supplies. That also lines up with more of a seasonal and expansion years, which we are in the cattle business. And also we recognize we do have a shackle space compared to fed cattle supply challenge, especially as we get out into there in the fall, particularly up in the Corn Belt region. So we've got bigger supplies. Well, on the good news, looking at the next illustration, we've been able to continue to see increased exports for all 3 proteins. They were up last year. They're forecast to be up again this year and again next. And so you can see in the text box, this year it looks like we're in the process of exporting about 15.5 billion pounds. And that represents, when you bring that back to a per capita supply on a retail basis, of about 39 pounds per capita. And so as we think about that total supply, recognize how important that really is, that export trade. Next illustration just gives you another visual of what that means. The red portion of the bar is the production that stays in the U.S. The increasing part, the blue bars, represent what is exported. You can see about 15 to 16% of what we produce for all three proteins combined is exported today. And so again, as we go forward, and this illustration goes out to 2020, you can see our forecast. We think with profitability across the board for all three proteins, there's no reason to expect not to see more expansion, and therefore the export market becomes extremely important for not only beef but all proteins combined. The next illustration rolls all three proteins together on a per capita basis, and again, the 2017 forecast, you can see, yes, it's still an increase, 1.7 pounds, but by and large, that's not as big of an increase as we've seen over the last couple of years, and really more manageable than we would have forecast the first of the year. So with that said, let's talk about the importance of exports. With the next illustration, what we're looking at is the value of what we export on a per head basis, looking at fed cattle in particular. And here we've rolled up beef, offal, and hides all together as the illustration as far as the importance from a dollar basis. And you can see the long-term trend. Again, you want to look back at 2004. What did BSE mean to us? You can see the difference there. It took basically $120, $130 a head off the market. You know, no wonder prices were devalued. You know, we were shut out of those export markets, and it really did hurt tremendously. And so as you think about the gains we've made, you can see that 2014 was a peak. You know, exports were a challenge in 2015. Actually, we turned the corner. The worst of the export market would have been late 15, the first quarter of 16. And in reality, exports have been improving really through the second half of 16, and definitely seeing that improvement so far year to date here in 2017. So another way of looking at that from a long-term perspective in the next slide would basically say, what percent of the fed value are we exporting? And you can see that basically we're just getting now back, when we look at a percent, not a head basis, but a percent of the value back to those pre-BSE levels. And so it took us a number of years. You know, it took us 13 to 14 years to get back to those pre-BSE levels, looking at a percent of value. But you can see how important it is when we talk about the cattle business, especially when we roll in the hides and the drop credits along with the beef. With that said, we're going to roll in not only the beef products, but also the dairy products. You know, remember that we are in the cattle business in the United States. The dairy side represents a big piece of the pie from a financial standpoint. And so rolling in the value of beef, variety meats, hides, live cattle, on top of milk products, you can see that we exported last year about 12.3 billion pounds, representing about 12.5% of the value. And that basically is 1 out of every $8 that are generated to come back into the cattle business in the United States comes from that export market. So as we talk about our discussion today and the value of additional exports, the next illustration I think will give us a base. And a word of caution here, because basically all we're doing to change the value is on the supply side. We recognize if you add another buyer on the demand side, that competition means more than likely you'll have a bigger improvement in price than this slide will illustrate. But this, I think, would be the minimum as you think about just the supply side of an improved exports. And so the illustration here is if you were to see an improvement of 50 million pounds of exports, that reduces your per capita supplies by 0.15 pounds. That's equivalent to about 61,000 head of slaughter cattle. And it should influence your fed market only on the supply side by about a quarter hundredweight, which is about $3.50 a head. And so you can see just on the supply side alone, it's worth quite a bit of value as you move up the ladder and see exports increase. So a gauge, something to think about as you think about, well, maybe we can get 100, 200 million pounds of additional exports from wherever. You know, what that really means from the supply side, bottom line, recognize there's an additional value there by adding an additional buyer to the competition. Next slide, we're going to step out and look at the global. And from here, just to give us a perspective of who are the players out there in the global export market. Brett will slice and dice a lot more of the information, in particular to China, as he gets into his side of the presentation. This is just more for informational purposes as you think about the big picture. Who are the exporters around the planet? You can see the beef in the blue, Brazil, ourselves, India, Australia, Canada, EU, New Zealand. Then you can look through the pork side. It's us and EU and Canada as well. And on the broiler side, hey, it's us and Brazil. And so as you think about it from a individual species standpoint as well as the big picture, you can see that we do compete, from a big picture standpoint with our South American competition as we think about Brazil in particular. With that said, let's roll to the next series of slides, and we'll talk about some of the markets, as far as an outlook. And as you think about the markets we've experienced the last 3 or 4 years, we've had a tremendous amount of volatility, and we recognize that. The markets had a huge run-up as we think about 2013 and 14. It's came back down the ladder from late 14 highs. Again, a downtrend as we went through 15 through 16. The couple points I'd like to make. Short term, the market's broken trend in here. Basically, as we think about where we're going to finish up this week in the Fed market, we're probably going to have an average closer to 122. So, not only did you break trend last week, but you also broke some support levels in here in this 124 area. It tells you your next point of support is back closer to probably 119 or 120. So, from a big picture standpoint, recognize that technically the market has rolled over. Looking at this cash chart, you can say the same looking at the technicals. If you look at the futures charts, the last 10 days, you've broke trend, you've gone through moving averages, you've broke support, you're in the process of seeing open interest seasonally decline, and we've got huge open interest out there, a record amount of non-commercial net longs that are going to have to blow out of their positions. So as we think about the markets going forward, you should expect more of a seasonal pattern as you go from this better spring demand that we've enjoyed with a tremendous amount of featuring over the last 60 days going in through the dog days of summer. As you go through July and August, the bottom line there is we've probably got more risk as we go forward in here. The next slide kind of rolls the year up, and as we think about it, I've got some different years circled here, and this is just kind of from a big picture standpoint. On the one axis, we've got price, and bottom axis, we've got per capita supplies, and you can see a pretty tight correlation over time. Tighter supplies, higher prices, and vice versa. As you think about some of the years I've circled, 09 and 10 in particular, remember those are recessionary years. We traded cattle below the long-term trend line from a supply and demand standpoint. 2014 and 15 at the top side, hey, the market was better than the supply and demand would have suggested because we had more leverage with tight supplies. The cattle feeder and the cattle producer got a bigger piece of the pie, so to speak, a higher percentage of retail. And then you can see the lump of years in the middle, 2011, 12, and 13 centered around the line, 16 last year and 17 where we're at for our forecast this year. You can see there's some similarities there. The per capita supply we're into today is very similar to what we saw in 11, 12, and 13 on average. And as we think about the demand side of things, after the run-up in 14 and 15, demand has softened some, but it is still, from a historical standpoint, retail demand is pretty robust. It's still pretty darn good. And so as we think about the markets where we're at today, we would envision, you can see that 17 is a little closer to the line than 16, basically saying that the leverage component has been a little bit better this year, and it has. Cattle feeding business has been a lot more current. Carcass weights are running well below a year ago. We've had some leverage, but nonetheless, as you think about the forecast for the next couple of years, increasing supplies on a per capita basis, unless we can get enough access and tonnage off the domestic market to offset those increasing production levels. If we can do that, that per capita supply doesn't grow as quickly. You can see that we're kind of stuck in a rut, so to speak, from a price standpoint. Still, the cycle works against us. The next slide kind of rolls in the beef side of the component. And as we think about the cutout value in particular, we know that it has rolled over. You can see we've got some trend lines drawn, support lines and resistance lines drawn in here on the red. The composite basically has been trading around 240 plus or minus the last 2 weeks. Now it's on the defensive and will drop very quickly. Just for some reference points here, you can see that the 220 leaving the packer with a tremendous amount of margin, which we think the packers will continue to have very good margins as we go forward in here. Just from a cycle standpoint, we've got plenty of throughput. That would suggest a Fed market somewhere in the mid-120s. If you back the cutout to the next support level at 205, again, keeping the packer very profitable, it pushes your Fed market back to 116 level. And then at 190, which we think is definitely cheap enough, even though we had the blow off on the bottom side last fall, a 190 represents something closer to $1.08 Fed market with very large packer margins still. They're incentivizing these larger kill levels that we need to continue as we move forward. And I'll finish up with the next slide, and then we'll turn it over to Brett. The next slide just gives us a big picture of where we're at from a cycle standpoint. We had the run up, started in 13, 14, and 15. We came back down the ladder, 16 averages. The 17 averages for all three classes, fed cattle, feeders, and calves, isn't going to be a lot different than 16. The market appears to have caught in here. It's still very volatile, still going to have some huge ranges, but the annual averages look like they're going to be pretty comparable to what we saw a year ago. Nonetheless, we still need to recognize where we're at from a cycle standpoint. There still is additional risk as we move on over the next couple years because of bigger calf crops, bigger supplies, that the production side of the market tells us the trend is still softer over the next couple years unless we can grow the demand side, the export side, to offset the bigger supplies. With that, I'll turn it back to you, Brett.
Okay, great. Thanks, Kevin. So as we prepared this webinar, we offered this as a free webinar to the world, and the reasons were to provide information around the markets, around this China beef deal, but also to really showcase our capabilities as companies. And I think Kevin just did a great job of showing you the work that CattleFax does and of their analysis on these markets and the work they do. And so you can all find that at cattlefax.com is their website. Now we'll shift over, and Richard Fritz and myself will talk about the China beef agreement. And you can see there we put together a promotional rate for the participants of this webinar. It's at agritrends.com/beef promo. If you go to that site, you can see our promotional offering. So if you have questions about what we do, you can jump on there. For CattleFax, it's cattlefax.com. So our work with Global Agritrends is to really try and provide concise, clear analysis on the global markets for protein, and we mainly focus on beef, pork, poultry, and dairy. So as part of that work, we spend time overseas. We do a lot of research work, forecasts, and analysis. And I spend about 3 weeks of the month of May in Asia, and about half that time was in China. And so it was timely because I was able to get a good feel for what's going on in the China beef market on the ground, talk to traders and importers, as well as looking at beef in retail and other outlets. So let's dive in here. Just a quick background on China beef. China beef's a small piece of their consumption. You can see that chart. That's the 2017 estimates. Chinese eat 88 pounds per person of pork per year, and only 13 pounds of beef, 18 pounds of poultry. You can see some of the quick stats there. According to the USDA data, they're number 4 in the world in beef production. In beef cows, they're actually number 2 in the world. Now, you got to take with a grain of salt. We don't know Chinese data. No one does. I don't, you don't, USDA doesn't. Nobody knows how many pigs or cows there are in China. But these are the estimates. And so you can see per cap consumption is very small, even though in terms of, say, production, they're the number 4 producer in the world. And it's simply based on the massive population of China. So let's look at this import market. In 2012, a few things happened. And one was that China allowed Australian beef in. And as that Australian beef came in, it provided a new product into the market and demand surged. And then again in 2014, 2015, they allowed Brazilian beef into China. And those two factors were a part of this huge demand growth in Chinese beef. There you can see on a global basis, China plus Hong Kong is now the largest beef importer in the world. That market's grown very, very quickly. If we look at what that is though in terms of retail, now here you can see that 2012 boom again, 35 RMB per kilo. So that was around $2 a pound was the average retail beef price back in 2011. And then the quick run up nearly doubled that price, and it's been just stubbornly high since 2013, 2014. You can see there that 67 RMB per kilo range. This is the average retail price of beef, and it's a 50-city retail price. So this is probably the wealthier cities in China. 50-city average price is about $4 a pound. And it's a very diverse market. I'll talk about that. But you can see the retail average is $4.46. That's a little below the U.S. average price of beef. But you can see there that strong demand that began in 2012 has not faded. Beef demand is very good relatively from where it started in China. All right, so what drove that? It's tough to explain consumer demand, but it was just simply consumer demand. In Chinese restaurants, beef became the new thing. If you've traveled in China recently, you see a lot of beef restaurants, and even though they eat a very small amount per capita, all of the major restaurants are looking for beef. And if you look at this picture, that's a hot pot. That's Chinese hot pot. And so you see the bowl of boiling water with the vegetables in. In a hot pot restaurant, which is probably the vast majority of Chinese beef consumption, the beef is served frozen and rolled up. So you can see those little piles of frozen rolled up beef right here. You take the frozen rolled up beef and you boil it in the hot pot and eat it. And I know that's crazy, and it's probably offensive to every rancher in America that they're eating boiled beef, but that's what they do in China. The vast majority is boiled. And so a couple things to think about. The beef that's served at the table is served raw or served frozen. So everyone knows white fat versus yellow fat. White fat being grain-fed, yellow fat grass-fed. And so there's somewhat of a scramble in China to keep white fat beef in the restaurants. Now that's very good for the US. We're a white fat beef producer. But they produce a lot of white fat beef by feeding some of their dairy cattle in China. I was amazed how much white fat beef I saw the restaurants in China. They don't produce enough. Their self-sufficiency is falling. In 2012, they were 99% self-sufficient in beef. This year, they'll be about 88%. That's one of the lowest self-sufficiencies of any commodity in China, excluding soybeans. Pork is about 95% self-sufficiency. But beef is not a strategic food item as defined by the government. It's a small per cap number. It's not nearly as sensitive as pork or rice or wheat or some of those other commodities. So again, we showed that big growth in imports. Here you can see, and what's quoted quite often is that China is a $2.5 billion beef market. This is China beef imports, including offal. You can see there in 2012 when they allowed the Australian beef in, how quickly that grew, and then look when they allowed the Australian or the Brazilian beef, how quickly that grew. So there's your $2.5 billion market. However, we all know that isn't just Chinese beef, legitimate Chinese beef in China. So if we look at the gray trade, let's fast forward here. If we add the gray trade on top of this, and what I mean by gray trade, this is the beef that's shipped into Hong Kong, and it's also India's beef that's shipped into Vietnam, which most of that beef is consumed in China. And we look at this as a greater China region. It's not a $2.5 billion market. It's more like a $7 billion market. Now, that's massive on a global scale. Just for reference, Japan is about a $3.8 billion market. So what we're looking at here is a $7 billion market that just 5, 6, 7 years ago was around $1 billion, $2 billion. So this market has grown and changed very quickly, and it's not done yet. They're developing cold chain, they're developing marketing, there's all different kinds of new products coming out. It's just changing very quick. But when we think about the expectations for Chinese demand around a U.S. beef deal, you got to realize U.S. beef is not widely known in China. It's not marketed in China. There's no promotion, and it's very limited. Most Chinese are aware of Australian beef, some awareness of Canadian beef, but U.S. beef's kind of starting from zero. Another thing, promoting to a market this big is very daunting. It's massive. The scale of these massive mega cities in China, to run a nationwide promotion would be very, very difficult. And I know the folks over at the U.S. Meat Export Federation are working very hard and have planned for years and have some great plans on how to do that. But it's not an easy thing. It's a very big, diverse, massive market. Another question, is the backdoor route via Hong Kong still cheaper? And it is. The importers explained that very clearly to me. It is cheaper. It doesn't have the duty that China does, but that's subject to crackdowns, and the crackdowns in Hong Kong displace product and disrupt markets. It's a very difficult and undependable way for beef to be imported into China. Legitimate beef will still need to be certified to get in. So what about this? What about niche orders? In the last 2 weeks since the Chinese beef deal has been announced, I've had a lot of phone calls about people telling me about the Chinese wanting to buy full carcasses, and lots of them, thousands a month. We'll talk a little more about that as we go, and I say maybe, but I think that would be a very, very small niche in China. Let me show you a couple of pictures here and talk about the markets. Now, you can find anything in China. You can, if you want to look at the beef market, you can go to 5 square city blocks in downtown Shanghai, Beijing, Guangzhou, and you can find beef priced at all different levels. Here's some Canadian, supposedly Canadian grain-fed ribeye. Again, I don't have a lot of confidence in how things are labeled and marketed, but Canadian chilled beef is not allowed. Now, this is being sold as chilled, so it's obviously been thawed. It's about $30 a pound. And I saw a few different examples of beef in that price range. This is at a very, very high-end retail store in Shanghai, a department store. Now, take it up a notch. Here's some Australian long-fed Wagyu, $91 a pound. And so you can see examples of this kind of thing and say, wow, you know, this market is endless and infinite, and we can pay whatever price it takes to get there. The point I want to make with these two pictures is it's a very diverse market. Let's look at the average price. The average price of beef exports, so this is these countries' exported price. US is $2.90 a pound into Hong Kong. Canada's $2.59. I just showed you a $30 per pound Canadian beef ribeye. The average export price of Canadian beef to China is $2.59 a pound. This is a very price-sensitive market, and there is some of that super high-end beef, but it is a very, very, very small slice of the pie. And so as you look at these prices across the board, Australia, that included that long-fed Australian beef we just looked at. The average of Australia is $2.43 a pound. And so this isn't a market with infinite potential for very high value or high cost beef. It's a very price sensitive market, and the importers were very clear about that. They said, we're very concerned about US prices. US beef is expensive. Price will be a very big issue for us in China. And so it is somewhat of a price sensitive market. So let's talk about the deal. Here's the deal we got, and you can like the deal, hate the deal. I know there's a lot of different opinions on it, but it's the deal we have, and the door's cracked open. Here's what we got. We got bone-in and boneless beef under 30 months of age, both chilled and frozen. Now, this is a little better deal than Canada had. Canada didn't get chilled. The cattle have to be traceable to the farm of origin. Now, that doesn't well, let's go through those requirements next. I footnoted that, but we'll talk about that as we go through what that traceability means. Zero tolerance for beta agonists. Not a maximum residue level, but a zero tolerance. No synthetic hormone residues. Natural hormone levels in a normal range, and that's yet to be defined as I understand it. And the problem with that is there is no normal range for cattle hormone levels, especially when we slaughter heiferettes, or there's heifers that are processed that may have been in the early stage of pregnancy. That's going to be a very difficult thing to iron out. But the key is there is zero tolerance on these residues. USDA FSIS system-wide approval. So China doesn't list and delist plants. They accept the USDA system. So if a load tests positive for beta agonists or hormones, that load will be rejected. Technically, they cannot delist our plants. This is a big thing. That's important. However, some of the other restrictions are really limiting to what kind of supplies we can send. And we got some off-all. Canada didn't get off-all in their deal, and so that's a little bit of a benefit as well that's over and above some of the other deals. 5 red off-all cuts plus omasum. And if you don't know what omasum is in the U.S., you probably don't. There's a bowl of omasum. That bowl of brown stuff in the middle, that's raw beef stomach. And this is a Chinese hot pot again. Unfortunately, that was my hot pot. And so I could choose from the pig brain on the right, the omasum in the middle, or the chicken kidneys up there on the top. There was also a bowl of pig intestine at the table. And so you can see it's served raw. You boil it in the chili, and the omasum tastes about like you think it would. Here's another plate of omasum. This was at another restaurant, a little higher end. You can see the boiling water in the middle to cook it. But that omasum has very low value here, high value in China. They really like beef omasum. So that was definitely a positive for the deal. So if we look at what this deal is, I put these on here, and we're going to circulate this. This webinar is being recorded and will be posted online, but you can go through here and look at the deal and what we really got out of that. Now I'm just going to click this first page. This is the FSIS library, and I'm not seeing that show up here. Let me make sure that's going to work. Well, maybe we won't go to that site. Actually, let's not go to the site. It'll go pretty deep. But this is the FSIS export library. So this is the requirement showing exports, what's required to export meat and poultry. Now at the top of the page under China, it shows the requirements, what's eligible, what's not eligible. There was a lot of confusion about this Chinese deal early on, and I think there still is some confusion about it regarding the restrictions on hormones and beta agonists and those things. This site, if you go and look at the China page, you have to scroll 4/5 of the way down through a whole bunch of other poultry requirements, etc., to get to where it explains the residues and the hormones and beta agonists. But you scroll 4/5 the way down the page and you see it. Right there, there are 4 Chinese documents with hyperlinks. You click on those Chinese documents and it shows the banned substances. And we'll talk a little more about that in just a minute, but it shows the hormones that are banned and the restrictions, and that was missing in a lot of the early coverage of this beef deal, how truly restrictive that was. The next link here is the AMS Export Verification Program. So when I mentioned traceability, all the beef exported to China has to be under an EV program. Now there's a lot of different ways you can certify. You can use a third-party system, however you want to do it. But the plant exporting must be certified by AMS. And so this goes through what that program is. It talks about traceability, what's required in the tags. And then that last document, if you click into that, you can go see what plants are currently approved for export to China and other countries under this program. Okay, so traceability, let's talk a little about that. What this says is that animals must be individually identified prior to leaving the place of birth or ranch of origin or forced residence for imported cattle with a program compliant ear tag. That ear tag is a one-time use tamper evident tag, has to have a non-repeatable unique number. It may be an EID, RFID, or a visual tag. And so that is the requirement. So if you have cattle that are hormone free today that you say, okay, they're free of hormones and growth promotants, we want to export them to China. The question is, when they left the ranch of origin, did they have one of these tags in their ears? Because if not, they're not eligible. And so going forward, this is a requirement. Those cattle have to have one of these compliant tags in their ear when they leave the place of origin. That restricts some of our cattle today, and it's actually pretty restrictive just on traceability. Also, carcasses must be, carcasses, meat products, this is boxed beef, everything, has to be uniquely identified and controlled. And so we have segregation all the way through the plant. So our big plants in the U.S. that process 5,000 head a day or whatever, they've got to segregate these products, carcasses and boxed beef separately, and identify them all the way through shipment. So that's a little bit of a challenge. And also, as I mentioned, the processors must be approved under the EV program. So let's talk about eligible U.S. supplies. We've got two main hurdles as I see it, and the first hurdle is traceability. So now today less than 5% of our cattle are traceable. That's a major hindrance. Now that can be overcome. We're very good at doing what we're paid to do. We currently have the NHTC cattle for the EU. Those cattle would qualify. There are other programs that cattle are traceable that would qualify. But it's still less than 5% of our cattle today. So the big question is this: will China derive a large enough premium to pull the U.S. cattle herd into traceability? Now, after BSE in Japan, we had source and age premiums. Those premiums were as high as $40 to $50 a head, and we had a lot of traceable cattle. Now, what I'm going to tell you here is that is highly unlikely under this agreement. It's highly unlikely we're going to see those kind of premiums out of China to pull our cow herd into traceability, especially when we consider the other restrictions. And let's go through that, and maybe that'll help it make sense. The second hurdle is the growth promoting ban. So this is hormones and beta agonists. This is difficult because honestly, there's no such thing as hormone-free beef. Cattle generate hormones. There's naturally occurring hormones in all beef, and so it's very difficult to test for hormones when there's naturally occurring hormones. But the reality is we use a lot of hormone products in the U.S. cattle feeding sector, and they're a great technology. They're approved under the Food and Drug Administration. We have maximum residue levels that say at the time of slaughter the residues have to be less than X parts per billion. They're very, very small thresholds. But the China agreement says zero tolerance. So while all of our cattle in the U.S. meet the threshold under the recommended parts per billion, which has been accepted as a world standard by Codex, China says zero tolerance. And so the difference between 8 parts per billion, which may be acceptable in the U.S., and 0 parts per billion is what they can test for. And if cattle have been treated with these hormones, they can test and they will find residues even if they're below our MRL level. So I've talked to a lot of feed yards and a lot of people, and I've had a lot of different opinions expressed to me about the value of using these hormones in our production system. And so here's the number I'm throwing out. It's as high as $275 a head in added cost to remove those from production. That's the value of these hormones in our cattle feeding system. So if I say, if I want to be hormone free, those cattle to produce hormone free are probably going to cost upwards of $200, $275 a head more to produce without those hormones. So if I take that down and say, what does that do on a carcass weight basis? That 275 divided by an 800-pound carcass tells me that's 34 bucks a hundredweight more on that carcass price. Now that's a big number, and I don't know if this carcass business to China, I think, will be very, very limited. But if you say, okay, we're not going to send carcasses, we're going to send chuck rolls, short ribs, short plates, and omasum, and a few of these things, well, take that 275 head and divide it by 40 pounds of cuts. All of a sudden, those cuts got very expensive. And that's why I say this hormone ban is very, very difficult. Now, if we look at it, they're going to be residue testing on arrival in China. They're testing at parts per billion, as I mentioned. They're not testing at the U.S. standard or the Codex standard of a maximum residue level that's okay. They're saying zero tolerance. And so we can't slip by on this. They will find these. Now, there's some questions about natural hormones. There's some of our older technology. There's the estradiol benzoate, some of those older hormones that we've used. The way that works is it goes to the liver and creates more natural hormones in the steer or heifer. And so those would be very difficult to test for, but they also have much less benefit than the trenbolone-based hormones that we use today. And so it's a difficult question. I don't think we have the testing protocol for natural hormones ironed out yet. I don't know what that'll be. It's very difficult to test a range of natural hormones, but the good products we have today are going to be detectable. So this is Canada's main constraint. This is what's really stopping them. And you can say, well, this is an unfair trade barrier and it's difficult, and that's justified because we have a Codex standard. We have a world standard on MRLs. However, China has done this to everybody. They're not just picking on us. They require this of all their beef. Not that that's okay, but they're not picking on us specifically. So let's look at what Canada's done. That's probably the best example. Canada has had access to China for 3 to 4 years now. And if we look at how much beef Canada sends to China, you can see here trucking along how much, mostly to Hong Kong, a little bit to China as that door opened, and in 2015 they sent a lot to China. Now, I was in China in early 2016, and the question I asked is, what happened to your Canadian beef? It was coming in 5,000 tons a month, and the answer I got was the Canadian government went to the Chinese government went to the Canadian exporters and said, we will test, and if we find growth promotants or hormones, you will be delisted. Now, they're on a delist system in Canada, so their plants can be delisted, and as a result, those shipments fell flat. Now, they're sending a little bit today, 1,000 tons a month. That's not a huge amount. But I met with some Canadian cattle feeders just this month, and we talked about this, and they said, look, we've done the numbers, and we do what we get paid to do, right? And they said, we cannot justify foregoing hormones on a large-scale basis for the Chinese industry. If we have a hormone-free program, sure, we can send some beef, but we cannot justify it on a large scale across our feeding sector. So, plan B, there's always Hong Kong, right? Kind of. That's the backdoor route. There's no traceability. There's no growth promoting costs or restrictions. If you go in the front door of China, you pay 25% duties. Hong Kong doesn't hold those, although there's fees associated with Hong Kong. But that gray trade beef into China carries no certificate. It's not authentic in the Chinese system. And so as I met with importers in China that talked about how this worked, they said if beef comes via Hong Kong into China illegitimately, that beef cannot be promoted as U.S. beef. It doesn't have a certificate. It's very difficult to do that. They said it's very difficult to use U.S. beef, and so even though U.S. beef may be legitimate, the U.S. beef will have to carry a certificate as it clears customs into China to be legitimate beef in China and be advertised as such. So Hong Kong's not a good route, really. We have the crackdowns, it disrupts trade. It's not really a solution. So let me go through, we're running out of time. I've just got one slide and go through my bottom line. So here's the China deal. Like I said, you can like it, hate it. Our point today was to provide some clearer information around what the deal is and what it is not. Of course, it's China. It's the biggest market in the world. We've got to exploit any crack in the door we can get. They've cracked the door open, but that crack is not very big. And here's my statement. This China deal that we have is not commercially viable on a large-scale basis for the U.S. These restrictions on the deal are very difficult. Now, I'm not saying we shouldn't have done the deal. This is what they gave us, and this is what they've given everyone. And it is a massive market, and there are going to be some small opportunities to participate. What I'm saying here is if you look across the U.S. cattle feeding sector and the big-scale U.S. commercial plants, we're not going to be providing beef from all of those feedlots and all of those plants to China. It's just too restrictive. The hormone-free cost is very prohibitive. Some of the other natural programs can benefit from China. There's going to be some small niche shipments. Any of those NHTC cattle, some of the other natural programs can benefit. Can we go back and get a better deal later? That's been discussed. I guess that's open for a lot of debate. We waited 13 years to get this deal. I think it will be very difficult. I don't know what the future of our trade negotiations is between the U.S. and China. Hopefully we can get a better deal somewhere down the road. But as it stands now, it's very difficult. The economics are tough. So here's a question. I know we have cattle ranchers, cattle producers on this call. Should you tag your calves this fall? You don't have to tag all your cows. You only have to tag the calves that leave the ranch. Now, you can tag at shipping, and you can check with your buyers and see. That's a problem, though, to run all your calves through a chute while you're shipping them and re-tag them. But check with your buyers and see. It's the same answer as I have to this question. Should you hold off hormones? Should you go hormone-free for China? And the bottom line is you do what you get paid to do. As an industry, we're very good at doing what we get paid to do. That's why we went traceability for Japan. We do what we get paid to do. And so I would check with buyers, and sure, if someone's willing to pay you to do that, do it. But I definitely want to have something, some kind of firm commitment before I hold off hormones on cattle or growth promotants because of the benefit and the cost associated with it. So again, we'll wrap up. This is our special offer. I mentioned we have a promo offer. We're offering a 50% discount on both our membership subscription and on our newsletter. And so if you go to agritrends.com/beef promo, you can see that discounted subscription. I mentioned cattlefax.com for their information. And with that, I'd like to thank everyone, and we're going to open it up and read through and take some questions. So I've got Kevin and Richard. We have a question box. If you have questions, type them in. We'll anonymously ask and respond as best we can to these questions. So it looks like we have a few in the hopper there. Kevin, I haven't read these yet. Do you have any of these you want to start on?
Yeah, one of these is somebody asked about the slides being available. Basically, we'll have the link as Brett described. There'll be a link to the presentation, so you can download the link and and share that with your cohorts and your compadres. So that's one question. Question here, Brett, that maybe goes into your line with your expertise from international standpoint. The future of India as a beef exporter, given the move to make it illegal to slaughter buffalo, and I know that's pretty fluid. And in their court systems right now, is there anything new that you'd like to share with that?
Well, the status of that is, and Fritz, you can weigh in if you have anything different. The status is that the government banned all cattle and bovine slaughter, and a court overturned that ban. And so the temporary status is it's continuing. They are continuing to process and slaughter buffalo in India. The latest statements I've seen was that the government said maybe that ban went a little too far, and it sounded like they're going to walk it back and probably allow some sort of slaughter.
Yeah, that's right, Brett. Plus, there's been some street protests in parts of southern India protesting the ban in terms of the religious freedom. So there's been social unrest and some economic impact. So I wouldn't be surprised if the court ruling stands and and this issue goes away from a political standpoint in China over the next in India over the next couple weeks.
Okay, thank you.
There's a couple questions that I think would kind of fall together here. What's the impact of Brazil's scandal on the U.S. protein export market? And that would dovetail with another question here, comment, just a comment on the recent ban announced here last night, this morning on Brazilian imports into the U.S. So those are two that would kind of fall together. I'll just give a quick comment, and then Brett and Richard can tag in. The ban is basically on fresh product, which has been was accepted here a few months back. They still have access from a cooked, canned, or cured standpoint. The fresh product coming in was not that big from a volume standpoint. The bigger picture, though, as we think about some of the scandals they've endured in Brazil year to date, it appears that that has stymied their exports of protein. And even though, as Brett alluded to, when we talk about the price of our product versus their product into Hong Kong, we don't directly compete in a lot of markets. That is one market that we do. We've got a different kind of product. In a roundabout way, if they can't export as much product, whether that's beef or other proteins, we do benefit to some degree. You guys want to tag in on that?
Yeah, what I'd say, yeah, the Brazilian scandal on U.S. exports has been minimal at best. I'm talking about the scandal of the tainted meat that was announced March 17th, as well as the ongoing scandals around JBS. I follow those prices. We report those prices every week to our client base on those livestock prices out of Brazil. And you can see the tainted meat scandal didn't have much impact. The JBS scandal had a little more impact. There have been a few companies that have said they're not buying JBS product around the world. But the export bans were lifted on the tainted meat scandal within a week, pretty much all of them. And so Brazil's still exporting. The U.S. one just went through where we've restricted that product, as Kevin said. That's a very, very, very small percentage of the meat we import. Another factor, most of Brazil's export markets don't mesh real well with U.S. export markets. We don't really compete head-to-head in most markets, but the impact on those exports has been fairly minimal for Brazil, at least thus far.
You know, the EU announced today, though, that Brazil has agreed to stepped up safety inspections of beef products moving into the EU. And I expect with the EU action and the US action, you're going to see more and more countries move towards inspection or some kind of constraints on U.S. beef and Brazilian beef into those markets. So it could have an impact depending on how intense Brazil looks at the EU product and whether or not the EU will find continual holes in the Brazilian inspection system and begin to delist further plants.
Okay. I know we're not going to get through all the questions, but let's look at some of these that may be common questions. Let me hit just a couple of these quick. Here's a question of, do we have to satisfy the EV program for never having been fed beta agonists as well as the China EV program to be eligible for export, or is it only testing at the border? Now for pork to China, for our pork system, those pork farms, processing plants, we have to have a never ever approval. They have to be approved and audited and certified as never using ractopamine. For beef it's different. We don't have to certify a never ever system. The beef can go, it will be tested in China. So we don't have to have a never ever ractopamine system. The EV program is mainly around the traceability. And so you can ship it, but it might get dinged and rejected over there. And so I don't think people are going to be willing to take that kind of risk, although we do not have to have a certified never ever hormone or ractopamine program for cattle. Can you clarify, if it is zero tolerance for all hormones or just beta agonist? It's a zero tolerance for hormones and beta agonists. Now, synthetic hormones they can test for, and they will find those if we use synthetic hormones. And natural hormones are a little more difficult. And as I said, there's big variation in the levels of natural hormones in cattle. I don't know how they'll really get their arms around saying what is or isn't legitimate on natural hormones. But the bulk of the hormones we use in our system today are synthetic hormones, and that's where we get the major benefit of hormone usage. And so they will be banned at a zero tolerance level, just as beta agonists will.
There's a couple questions here, Brett, about the product that was shipped out of Nebraska this last 10 days. You know, two questions. Has it arrived? Has it been accepted? And who supplied the product? And I think on the website that you suggested people look at, there's four packers that are already approved, basically the ones that are NHTC approved, and the two shipments that I've heard of coming out of Nebraska were two of those packers on that list. Has that product arrived and has been accepted? I don't know, Brett or Richard. Do you have a handle on that?
I just saw that the first shipment arrived last Friday, and I know there was some air freighted shipment. I'm not sure that was being sold commercially into China or if it was just being shipped over for some celebration events for the market reopening. But I had read a report that there was some beef that had arrived last Friday.
Okay.
Okay, here's
again,
a
on the
question.
USDA website, they have the list of the packers that are approved already.
Yes. Here's a question. If Hong Kong and Vietnam are so hard to move product, how does $5 billion go through the gray market? And I mentioned that, you know, how difficult that Hong Kong market is. I'm talking about U.S. beef, how really difficult that Hong Kong market is. Perhaps the worst kept secret in the global meat world is Indian water buffalo that's exported to Vietnam then consumed in China. And I say that because I was at the Seattle Food Show in Shanghai last month, and one of the biggest booths in the beef area was the Indian water buffalo company. And there were multiple water buffalo companies. It's very open, it's very blatant, and that's about half of that gray market is now Indian water buffalo through Vietnam, and so that's treated a little differently, I think, than some of the other product through, say, Hong Kong. But there's definitely a lot of that Indian product, mainly going into the processing sector in China.
Here's a good question. I think, was the Australian import requirements as restrictive as the ones that the U.S. just negotiated with China? And maybe you two can make a comment on that, not only the Australian agreement, but also, as you mentioned, the Brazilian agreement to get product into China. Is it very similar to what we negotiated, or is it a little bit different?
Yeah, I'll take a shot at that. It's in some ways we probably have a little better agreement because of the off-all and chilled. Now, I think Australia may have recently received chilled access. I know they've been working on chilled. But the reality is they don't have large-scale cattle feeding like we do, and thus they don't use hormones in feed. And so this agreement, the ability to restrict hormones at a zero tolerance level, is really a free license to pick on the U.S., in my opinion, because these other countries don't feed cattle like we do and don't have that economic incentive to use hormones. And so it really is mainly the U.S. that gets hit when you put that kind of ban on. Now, all beef suppliers to China have to have a traceability system. And Australia, Uruguay, Brazil, Canada, that's always been the long-standing deal. And as far as I know today, there's only two major global exporters that don't have traceability, and that is India and the U.S. And those are the two that are really restricted, at least technically and legally, from China, is the two that don't have a broad national traceability system.
Brett, there was an announcement by China and Australia that chilled beef would have access. I'm not sure if all of the documentation requirements have been completed on that, but they have announced that access would be allowed.
Okay. All right. Well, I know we've went over a little time. Is there, let's see, is there another question that maybe a few people would have? Here's one. Talked about the import conditions for live Canadian cattle. So live cattle from Canada can be imported into the U.S. and will be eligible for export to China. But the traceability begins at the place of origin. So if we import Canadian feeder cattle into a feedlot in the U.S., we only have to trace them from the feedlot through the plant. So the question is, that's a less restrictive requirement. Do you see an influx of these imports of these of feeder cattle, or say for cattle for immediate slaughter? So we could buy live cattle from Canada, and they would be eligible for China without the traceability requirement because they only have to be traceable at the border or the port of entry if they're live cattle. So yeah, and those cattle are traceable anyway, right? Because Canada has a national traceability system. So I guess that's why that's probably allowed. those cattle would be eligible. You could import live cattle. I don't see an influx of those though, because that hormone restriction puts such a heavy cost on those cattle. It's the same math on the Canadian side of the border as it is on our side of the border. Those cattle are going to cost another $275 a head to produce. So I don't think that math changes on either side of the border. I don't see a big influx of those cattle coming because of that requirement. Anything else? Kevin, Richard?
I think we've covered most of the questions. There is a few still in the queue, and with restraint to time, I think probably be best if those folks that didn't have their questions answered, you've got both Brett and myself's email. Just go ahead and email us, whoever the question might pertain to, or both of us, and we'll respond. From our end here at CattleFax, it's a pleasure being on the webinar with you, Brett and Richard, today. If anybody has any questions about CattleFax that aren't members out there, visit our website, cattlefax.com, or give us a shout at 800-825-7525.
Thanks, Kevin.
And again, the broadcast will be available to be downloaded.
Thanks, Kevin. Appreciate everybody joining us today, and hope you all have a good day. Thank you.